The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good early morning, everyone. This is the 8:06 a.m. early edition of the opening call. Oh, that's my newsletter. Sorry, of the Tiger Technicians Hour, and we'll see exactly how this pans out, because my inkling is that we have early strength, and we'll see if a little later in the day we start to see a stalling. That's going to be important because I'll go through all the different charts right now, and I'll explain why. Within the context of this, well, first of all, I've got the gold chart up. I may as well talk about that right away. Gold, this is a really strong move from the 1950 level to today's high of 2072 in the continuous contract. I have an alternate count. This is important because in the pattern that I'm looking at, there's a cup formation, and we've gone very nicely above the high that was made around about the end of October, 27th, etc., at a 2040 level, peak C1, C2. That very often culminates a buy mode, and then there's a pullback. But if that pullback is just minor, if it doesn't go towards the starting point of the actual buy signal to buy mode, it means it could be a continuous pattern in the notation of the Chapman wave. So this is a gray A, this is a gray B, and here is a blue C. But if that's a continuation of that P C1, C2 saying, oh, ultimately you got to that D, this is going to be really important as we look at it right here, because within the context of all the technicals that I look at, the price is way above the 9-period moving average. The 9 is above the 14. That's very good. The MACD is positive. You see the green line is way above the pink. That's the 9-period differential, and that's the 26-period exponential moving average. And the stochastics at 91%. And I can't say flat because it's just got there, and it's just the green line, that's the faster moving average, is just starting to dip now. But that blue on-balance volume is somewhat overbought. The relative strength is still great. There's a daily chart on it. This gray line right here is the relative strength, and that relative strength is rising and still very strong. That's the daily. The weekly chart has broken out quite significantly. It's exactly the same thing, 9 over the 14. The MACD is good, not as good as it was way back when it made that high in April, but it is increasing. The distance between the green, the pink line or red line is a histogram, that 0% line. You see how these little vertical bars in the weekly chart are rising, and that's very good. The stochastics at 81% over 80% is good, and the on-balance volume is somewhat overbought. The monthly chart has got this U-shaped pattern and a smaller U-shaped pattern. Now it's going for the third, and so far it's in a sideways. It's really basically a sideways pattern, but the technicals are just starting to garner strength. So gold, very, very strong move from the low that was made at about 1840 in the continuous contract. Certainly a fabulous move to 2062. My impression from everything I'm looking at for here, I want to go to the 120-minute chart. So let's just go there, window 120, where do I see it? Right here? Nope. Wait. Am I looking at the right thing? Oh, no. I'm looking at this here. Okay. So that 120-minute chart right there has, I had this notated. Oh, I guess I lost it. So from the low bar, we have to go all the way there. This is peak A, peak B, peak C, D. Boom, brand new peak A, B, C, and then you get your D. And then it starts peak A, another little A down there, B, C, D, E, and then you're at an E. And my suspicion was that gold has had a fantastic move. And yesterday you saw the surge in some of the lagging gold stocks having a fabulous move. They might even move up a little more today. But what's really important, I mean, the impression I'm getting here, and I'm putting this now together with the dollar, is that the dollar has hit that point, that 102 that I said months ago. That's the period, that's the level I'll be looking at. Can I do this? Yes, I'll make this a little lower. I'm not sure how these charts keep moving around. Okay, have a look at this. So the dollar has done pretty much what we were looking at. We actually still long the dollar from 2018 at 90. We've seen it go. We've taken little bits off. This is a very long-term position. But that low right there, that was on August the 30th. Yep, August the 30th of 2023 at 102.94. We went under it early this morning. We went to 102.47. I don't know why that, did I raise? Oh, that's right. Gold gets, the dollar gets smoothed out. So the plumb line said that it should get to this level within yesterday, today, or tomorrow, and it's just done that. And it went a tad lower. I've got to pull that down a little bit there. So now what we're looking at is, within the context of support, the stochastics at 6%, that's very low. But of course, it's the same thing as the upside when the price is in the 95% or 94% area and flat. That's fantastic. Well, it's kind of flat in the 6% area. So a lot has to happen for it to start to move higher. The MACD is very weak, but the histogram is slowly improving a little bit. The 9-period moving average is very weak under the 14. So this is the period that I said there's a chance that right now, in the next couple of days, that we see some kind of a bounce in the dollar as gold tops out just shorter term. I'm not sure we're talking about days or a week and a half, but just kind of takes a breather. And look, here we are. I can't remember where this trend line comes from. I'm just getting rid of it. Horizontal line. Oh, I had it there for other reasons. Okay, so within this context, the dollar has gone above the previous highs. In fact, it's gone above all the highs up until May of earlier this year. May when it was traveling in the 2100s. So it's at 2062. It's at this candle right here. This is the start of the big ugly candle on the downside. So I'm just thinking that maybe it stalls a little bit. Look, all the technicals are very good. And as it stalls, you get the dollar bouncing. And now I'm going to include the pièce de résistance. And that is the bonds. Bonds are up right now 1930 seconds at 117. Also in a G/C. That's an alternate count. The MACD is good. The 9's over the 14. The stochastic is at 81%. Look at this on-balance volume. Kind of overbought. It's on a very short-term basis. I'm not sure it's going to work out. But I think we're just getting to a point where there could be a little digestive phase. And how that pans out is going to be very important. I'll go to other indices as soon as I return. This is now the early edition, 8:14 a.m. I'll be back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. I wanted to go through, so in the very short term, the 1 minute chart, this is at 8:15 a.m. Eastern Time, early edition, just making a peak D in the 1 minute chart, leg E in the 5, leg F in the 10 minute chart. So I just wanted to go through that. Now, let me go back to this. So we're looking at bonds. So the bonds, US bonds, trading alternate account G/C in the daily, leg A in the weekly, and a horrible looking chart, but it did a beautiful, just as I'm talking about the dollar, so the bonds have had this left side, right side price time match to 109.730 seconds. Back in August, there's a monthly chart back in August of 2013. Isn't it amazing how long we can go? 109 or 107 is the low. And what did we do the other day, last month, I should say, is we went to 107 and 630 seconds. Isn't that amazing? We've been all the way to 185, and now we're down again. So this is looking for a bounce. And the stochastic was, it's just rallied a little bit. It's 11%. It was at about 9% or so. So let's go back to the dollar, and I'll show you. Look, and there's the dollar in the monthly chart. This is very weak, but the 9-period moving average hasn't crossed negative yet. And yes, the MACD's turned down, stochastic's down 35%. So there's still some internal strength. If you look at the EUR USD, this is a euro-dollar currency pair, stuck in a downtrend. It's had a bit of a move to the upside, nothing great. If you look at the USD, I should do this, let me do this here, right. So there's a leg G/C in the euro. It's almost like the dollar, right? And at the 200-period moving average resistance in the weekly chart, and the monthly chart is rising, but it's got a lot of resistance up at the 1.14, 1.15 area. If you look at the USD JPY, that's the yen, it's the dollar-yen currency pair. Looks pull back sharply. It's right on this channel, this up channel, very long-term up channel from the beginning of 2023. Look at that. I must move just a little bit to make it conform. There are. So yeah, we're right there. And interesting enough, the DBA, I'm just going to throw this in because the chart looks the same. The DBA had hit the support this week. That's the DBA Agricultural Fund. Big move up yesterday. It was looking terrible. Now it's almost back to the breakdown level. So I was thinking, well, if agriculture, the whole wheat, soybean, corn, sugar, if that whole area is this weak, that should be a deflation, you think. So this big spike to the upside, got to watch it, because if at 21.94 it moves higher, that's going to start impacting the inflationary aspect. So here's your downtrend line. Give it a little bit of a pullback there, right? Okay, so that means the area of 22.10, go to 22.15, you're breaking to the upside. So we're watching this very closely. So I also want you to do this. I've got a couple of questions I'm going to get to in the den. Yeah, this is with Chapman Wave automated. No, I don't want that one. I want this one here. I want this one right here. This is with the Chapman Wave automated. Here's silver. It's broken out above the resistance of Chapman Wave automated resistance and support levels. It's just gone above the resistance. Gold just gone above the resistance right there. It's done it before, and then it sort of pulls back a little bit. In this case, the technicals are strong. We're going to be watching closely. If I do exactly the same thing with the dollar, look what happened. The dollar has a whole bunch of support levels. 102.48 is the last one here, and the low so far is 102.47. These are automated. Look at how it got that resistance there. Look at so now let's do the same thing now with the Dow. The Dow 35,572 is a resistance level. It went to a high yesterday of 35,000. What was that? 518, 510, 518. So we're very close to some kind of resistance levels, but that doesn't mean to say it has to stop there. If you look at the S&P, these are Chapman Wave automated levels. This is the daily chart, 45.66. It went a little bit above that. It went to 45.68.43, and 68.14 was the high yesterday. And pre-market, the S&P futures up 24. Let's go to the futures and see what happens. Yes, we'll go to the continuous contract. Right there, there's a whole bunch of resistance levels. And yet there's nothing, flat stochastic, I love that. So there's nothing really negative about this. We did set in place a short position. It was more based on weakness of one of the indices. And if you look at the QQQ, and a very tight stop, not playing any games, you're in and out, either right or wrong. And that was just the start of some kind of digestive phase. And look, 397 in the QQQ automated, and we went to 393.07. So all of these are suggesting we're getting to some kind of, at least a digestive phase, some kind of some kind of moderation of what's going on. So let me go quickly finish these up. You've got crude oil right now. Crude oil, this is pre-market, pre-open market at 824. 824. Well, I guess at 8:30 we'll have some economic news. Up $1.27 at 77.66. Let's see the automated, what it said. Let's go back here. Automated crude oil, 70.02 was the low. The automated support level, and the low was 72.37, and then 80.95 plus the 200-period moving average of 78.83 and 80.89. So I just wanted to go through some of those just to show you the reason why I'm saying just in this particular phase, I think we're getting a little toppy and we need to have a digestive phase. The market doesn't know that. Just my eye says that. So with that, now I just want to see there's some questions in the den. Could I look at, where was it? Basil. VFC. I think that was the first question. Let me just go here. VFC. VFC is VF Core. Is this the clothing? So it had a peak A and a peak B and keeps pulling back. He's looking like a Chapman wave buy signal to buy mode on the weekly. Daily already in mode by my read. Now, this is a peak B. I would have to say, to give it the upgrade, I would say yes, buy signal. But a buy mode, I'd have to actually wait for a high above 18.04, 1805 with start leg C, and then I'd say, okay, buy mode, because it should go to a D. And the reason is, look, the stochastic's only at 65%. The on-balance volume is kind of weak. Yes, the 9 is over the 14. I like them all together in sync. And then what happens is it gives you that impetus, it gives you the torque, that starting energy to be able to get the momentum to put it into the higher gear. And so far, that's just a starting position. It's filled in the gap. That's okay. And it's above that. Pre-market, it's at 17.29, up 38 cents. The weekly chart needs a high above 1890, the week of the 20th of October. I'll be back in a moment. Basil Chapman, early edition.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Folks, we're back and we're looking at, this is VF4, I'm looking at the monthly winter peak F. That's, I believe, is this in the clothing area? Excuse me. Yeah, there it is, peak F, big move down. So we just had some economic report come out, and look at this whippy, up and down, huge candle, 45.90. was the high so far, and 45.86 is the low. I mean, that's 6 points. It's a very quick move. Now, is this setting the stage? This is an F. I'm calling it an F for now. Is this setting the stage for a breakout to the upside? or is this setting the stage for some kind of a digestive thing? Well, we'll give it a few minutes, but the way it's looking at this particular point, you have to wait to see whether or not the impact, you remember, it's not what the news is, it's how the market responds to the news. And in this particular instance, let me just see if there's any update here. Oh, wow, what a lot of writing. I didn't see that. Don't trade yeah, so in this particular instance, we have to wait a little bit. Nobody's told me what it is, so I don't know what the news is. It's obvious at 8:30 economic report. My suspicion is that if there's a pullback and we go under, let me just do this for a moment here. Okay, I'm just doing this quickly. Yeah. Okay, within the context of markets, you have to wait for the news to settle. So we'll give it a couple of minutes and see what happens. If at any point in the next 10 minutes or 15 minutes, it takes out the low of this candle, then what we're looking at is there's a chance that we just made an intraday high, at least for the morning, and we could have a digestive phase. And my anticipation, as I said to subscribers, is in my analysis of the Dow, I do a Dow chart every single day for subscribers, is that there's a chance that we have an early market rally, and then towards the end after 2 o'clock, we start to see a fade. But that is just a scenario that's a possibility. I'm not sure if that's going to work. But in the meantime, back at the ranch, let's get back to our story here, because what's really important about this is that so this is the pattern that I'm looking at here for VF core. The question is VFC. The question is, with Nike and the others having what's that stock? The Foot Locker. Maybe this will be influence and you could have a bounce. So we'll see what happens. All right. In the meantime, back at the ranch, what I am looking at here is, so now we need to go through certain stocks. So let's go to Apple. And this, of course, is at 8:33 in the morning. This is AM. I'm usually doing this would be at 10:33, so we've already had an economic report. So Apple has made a doji candle high, and that high is at, I should have typed it in, I'll type it in now, at 192.93. So let me just type that in. I usually put that in gray, 192.93. And got that there. Okay, and within that context, all the technicals are good. Only the on-balance volume gave you a signal to say it was somewhat overbought and that there should be some kind of a pullback. In the weekly chart, it's got a right shoulder on the with this big rally. Hasn't taken out the 188.23 high of July, but in the meantime, it is holding very well. It's up 40 cents pre-market at 190.80. But it too looks like it just needs some kind of a digestive thing. Let's look at Adobe. Have I updated Adobe? Yep, Adobe, there's your peak D. I don't know how many peak Ds we've had lately, but we've had tons of them. So Adobe is trading at 629, up 568 pre-market. There is a little doji candle and then a big candle yesterday, but with a lower high, so that does make a peak D. Within that context, what we are looking at is weekly chart as an alternate count, still very strong. All-time high was up at about 700. It was in maybe November of 2021, and it plummeted down to the 260 or so area, and now it's way back up at 623. So Adobe is a fantastic company, digital marketing, cloud, AI, yeah, they've got the works. But in the meantime, what we are looking at is on a very short-term basis. See, this is the thing that I practice all the time, even here in the E-minis. Look, when it's starting to turn down and the technicals are very strong, before the green line, the 9-period moving average crosses negative, you can have quite a number of bars. Look, even now, as we're looking, this 1-minute chart is S, and then S disappears because it's a 1 minute. You've got to give it the full minute. You can't talk about it until it's closed. But if that S remains, it means now you've got, for the first time since it crossed positive, back at 7:55 this morning, the 9-period moving average has been green, and now it has a chance. There it is. It just turned pink. That still doesn't mean to say it's going to keep going down, but right now that's what you're looking for. And you've got a peak F. So another minute or so, and I would put a down arrow unless it rallies sharply. So within that context, you've got an E in the 5-minute, and you've got a potential F in the 10-minute. So, but look what I'm saying is that the 9, when the 9 is very strong over the 14, look how long it's going to take for that green 9-minute and the 5-minute to turn pink. Well, that's the same thing here. And that's the reason why I say to subscribers, I could be a little early in this attempt, at the first attempt for a long time at going short. We did, remember, we got August the 1st, the exact high of the Dow, because of one of our technical indicators. In this particular instance, look, Adobe, the 9 is above the 9. The 9 is above the 14. The MACD is good. Stochastics at 92%. It's going to take a lot for it to turn pink. Let's go to, let's just look at the Dow for the moment. It's the same thing. The green price is way above the green 9-period moving average. In other words, the price is above, the 9 is way above the 14. It's going to take a lot for this to turn negative. Probably 34,400 is where it'd have to, another 1,000 points down from here before it turns negative. So it's a process in place, and that's the process that we're looking at right here in the E-mini, where I can now put a down arrow because it turned pink, and I can start to look at the downside and say 45, 83, and then 45.81, the 200-period exponential moving average. If 45.83 gets taken out very quickly, then the 45.81 level. So this is the same process. Doesn't matter whether it's a 1-minute chart or a daily or whatever. So in this particular instance, I'd said we've got our stop in place for our short position in one of the indices. We'll just have to have patience. If it gets taken out, it gets taken out. Yes. Okay. So within that context, look, here's the S&P. That's the cash. Let's go to the E-mini. This is the continuous contract. So you went to a D and you took 3 bars, you couldn't make a leg E, and then overnight we went to an E, and the 9 is above the 14. And if you look at this, the MACD is strong, stochastics very strong at 93%. So it's going to take for the E-mini, for the S&P E-mini to actually cross negative on a daily basis, you'd have to see 44, probably 44.86. Is that going to happen in the near term? I don't know. But I'm just saying the time it takes to roll over sometimes can be kind of lengthy. I'll be back in a moment.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Folks, we're back. We're looking at a question that came in about Fubo. Fubo is Fubo TV. This is what we always do. We look for the lowest low bar right here. Okay. Oops. Two up arrows. That's an A. B. So we're always looking for a D. Yep, that's a C by 1 penny, I think. Let's just check it out. Maybe not. 318 and 319. So that becomes C, and that becomes a D. All right. And always put a plus sign over the D because that's where other things can happen. And so far, the 9's over the 14. Everything looks good. It should rally again. A weekly chart went to a peak A, B, C, D, E. Under it, it's got a gray A, gray B, and already a gray C. All right. So this is acting very nicely. It's at $3.23, up 5 cents. I'm anticipating, if I'm looking at this correctly, always want to open it out so that you can see the whole chart. You see, there's a left side high. It's taken that out. It hasn't held it, but it's taken it out. Then there's this major high right here. So we always have to go to the lowest low bar. That's the lowest low bar. A, B, C, A, B, C again, D. And then it goes A, B, C, D, E. And that's a peak E right there. And that is at 387. Can I get to 387 right now? I think it first has to challenge this high of 342. 342, yes, that was a high of about 6 sessions ago. And most importantly, with that 9 holding it, it's walking the 14 and 9-period moving averages. That's a good sign. So yes, I like it. It has to hold over the next 3 days. It mustn't close under 292. If it does that, it kind of negates the whole thing. But at this particular point, it's making higher highs and higher lows. It has made a peak D, but this has a tendency to go even a little higher. So yes, I like this very much. If at any point, here's your Chapman Wave inverted Roman candle, if at any point it can hold for 60, make it 90 minutes. Any day, it can hold for 90 minutes above $3.35. That's the day that it's going to try to go to $3.42. That's the high that was made 6 days ago. All right, hope that helps you. Next question. Okay, so I wanted to look at a number of things today. I started looking at some of the biggies, the big 7. Why, if they start to pull back, you really need that to have some kind of a digestive phase. And within that context, if you just I wanted to do this quickly because it came up. The TLT is trading at 91.67, up 19 cents. It's been it doesn't look it, but it's actually been a slow move to the upside considering the speed with which it came down. But it is making a V-shaped pattern. And I'm suggesting to you that the 92 area, maybe 93, 92 to 93 is going to be the big test. The quicker it can break above that, the better for the market because yields will come down, and that in the shorter term. That should help the XLF. The XLF is the financials, had a peak C. It's trying to go to a leg D. Weekly charts, because it's like a double V-shaped pattern, which goes like a W. And it's holding very nicely from the 31.46, was it? 31.36 low at the end of October, 31.36. Percentage-wise at 36.25. This is one of the best moves it's had to the upside for a while since the high that went in July. So as it stands right now, I'm looking at this and saying, I wanted to see the XLF move well. It should go together with lower heels. We're looking at, say, a JP Morgan, right here, JPM. Legs at a peak C, it should go to a D. It's broken above the Chapman wave. Falling axis is expanding wedge, declining wedge formation. It's held very nicely. So this is a good sign. But at the same time, the on-balance volume is saying it's getting a little over. Might have one more pop to a leg D, but this is also the area that you've got to monitor really closely. All right. So with that said, so that went to that. I want you to go back. We were looking at Apple, peak C, right? Uppercase on the way up. Apple, I said closing out, it was up about 37 cents at 190.77. The pattern itself is a very strong pattern, but it's also a pattern that says there could be a sideways to slightly lower digestive phase, which makes the 187 to 186 area key support. The upside, the upside's open to 188, but in the very short term, 188? It can't be 188. I made a mistake. Apple's all-time high was 198. 198. Oh, that should have been a 9. How embarrassing is that? 198. So it's the 193 area. That's going to be somewhat of a bit of a resistance. Apple, we're looking at it's just Microsoft. Microsoft trading right now up $1.86 at 384.56. Now, I've got the circles here, and the reason why is that in the Chapman wave methodology, if you go to a peak D, and within 3 bars, you make a new recovery high, that is an E, but you've got to think, E, maybe it's E/A, and the next high is an F/B, because in the instant restart, you could have a brand new buy signal that goes to a buy mode for another 4 higher peaks. It's a technique I developed decades ago. It's an amazing technique. I don't know. I've been getting Stocks and Commodities magazine just forever, and I've never seen anyone talk about that. Something that I discovered years ago. Each one of these techniques that I discovered always costs out quite a bit of money to mistakes to finally figure out that that's a particular technique that you can use because of its consistency. So it doesn't tell you that it's absolutely a brand new buy signal, because look, the on-balance volume is somewhat overbought. So I'm anticipating there's going to be a bit of a pullback. But if the pullback is just very minor and doesn't take out 171, if it does, it might, and then makes new highs, that forms a particular technique. But at this particular stage, that's your clue. Under 171, 371 kind of negates everything. Here we are at 384. Leg E/A in the weekly chart. Why do I have a /A? E says, oh, be a little careful. A says, are you kidding? Any pullback you want to be buying. And the monthly chart says it broke out, but the month isn't finished. We've still got a couple of days there. It has already broken out from the Chapman wave inside track resistance area. Does that become a propellant rather than a repellent zone? We don't know yet. We have to wait until tomorrow. Until tomorrow? Yeah, till tomorrow. November the 30th is tomorrow. So with that said, we'll watch that closely. Magnificent 7. Amazon. It's Amazon trading at 148.13, up $1.10. Yes, it's had a very nice move. I've got this. There's a Chapman Wave instant restart potential. My thinking right now is that it's more likely to be a P, E, or an F, and then pulls back a little bit. In the meantime, I'm not ignoring it. Very good action so far. I'll be back in a moment for the final segment, and this is the early edition Basil Chapman Tiger Connections Hour.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So in the final segment, just because this is the early edition and we're not looking at these charts live, in other words, this is pre-market, 147.89, up 86 cents in Amazon. Hasn't yet turned down yet. So this is what I was anticipating for today, that we would see a rally early on, but that later in the session, there should be some kind of a pullback. That's when we're going to watch to see. I might be early on this, maybe a couple of days, whether the dollar is able to turn around to the upside just for a bounce, and that bounce gives us a little kind of a breather in the general market. If the U.S. bonds, which are up sharply now, they're not as sharp as they were, start to pull back a little bit. If the gold stalls here, it's already down from the high of the day. It was at 2072 on the continuous contract, now 2060, but the day hasn't even begun. So I'm just saying, my anticipation was that we would start to see some kind of a pullback, and it's a slow process. All the technicals except on-balance volumes were really strong. So it has to be bad news, and so far we haven't had bad news. And if you don't have that dark news cloud cover to see the market go down, taking bad news as a bad thing, It's just ignoring it, and that's a positive. So those are the aspects we're looking at. If the Dow actually holds a plus 80 or more after 2 o'clock, I don't think it's going to fail at the end of the day, but that's what we're looking at in the short term. And the S&P and the QQQ were all kind of lagging, and the SMHs have made a peak C1, C2. They're up $1.72 at 162, but they need to get to 165. Is that 14? Yeah, 15 to start a leg D. So all of this is premature to say we're turning down, but I'm saying we're starting a process that says we should be digesting gains over the next couple of days. With that said, we're about to wrap up, and so this is the early edition. Up here, it'll be 10:56. We'll see what happens. Will the futures be, the Dow futures up 113? Will the Dow be up 113 at this time in 2 hours? We'll see. In the meantime, there was fantastic action yesterday, especially in the golds. So monitor everything, and no big message here. As I said, caution. Stay tuned.
You might think that if you want to be successful at trading in the stock market, you're going to need